Hey everybody, Charlie Chedester at Midwest Family Lending. Glad to be back. We're going to talk about a couple big things today. Credit cards, which I'm sure you guys all are aware of, but we're going to go through some very important details, as well as what a budget is. These two things together can either make or break what you do right after school, and what your credit history and credit profile looks like for the rest of your life. So here's what we're going to go with. We talked about learning to earn. Get the career, get the job that you want after school with a proper education, whether it's trade school, college, or otherwise, so you can have the proper budget, which how much money are you going to make? Next thing is you need to learn to live, and that's living within your means. That's where the credit cards are going to come into play. And then we'll take it again. We'll get back to learning to saving, learning to investing, and then learning to give back and donating. So right now, how many of you have a credit card? I'm sure if you don't, you probably have access to a parent's. They're extremely helpful. The question is, what is it? Do you really know what you have when you pull out your wallet and say, you know what, I'm just going to go pay for that? So I like it. I don't have to carry my checkbook. But when you get a credit card, what you're asking is a financial institution to give you money with no collateral. That's why they're higher rates. That's why many of them have annual fees, especially if you have lower credit or no credit. And that's why they have very high fees for late payments and things like that. They're loaning you money on your good word. So when you go to apply for a loan, it's very important that you look at what the terms are, what options are, and not just get the first card that you have thrown at you for a free t-shirt. Now some of you may go get your first card and they say decline for an unsecured credit card. You may have to get a secured. And instead of having the bank just give you money on your good word, the secured card you're actually going to cough up, here's how much, $300, $500 as a deposit. That money is going to be their safety net saying you can have a card, but it's going to act more like an ATM card where you're using your own money, and then when the bill comes, you reimburse them and you build a better credit history. So therefore, hopefully you can get that unsecured card down the road. Now another piece we want to take a look at are store cards, full credit cards, MasterCard, Visa, things like that. They all report to credit these days, but your Gap card you can only use at the Gap, and they typically have a smaller limit, and then therefore you're going to go charge a couple $100 on close maybe, and you got a $300 limit. That's something you got to watch because you don't want to max out credit cards. It hurts your credit score. But store cards are very specific to that store. Whereas if you get a MasterCard or Visa, or Discover, or American Express, whatever it may be, you're going to use that wherever any place accepts those types of cards. They're much more versatile, they're typically less expensive, and they typically will give you higher limits. So when you go to get a card, again, anticipate what uses you're going to have for them, and that way you don't have to have too many accounts sit out there or cycle a lot of accounts. Cycling accounts isn't good for your credit score or credit profile. We'll hit that a little more later. So why do you need a credit card? Well, first of all, they're very helpful, they're convenient. A lot of places don't take checks, you don't have cash, but most importantly, long term, when you want to buy a car, rent a house or apartment, or buy a house, or go get an employment application. They want to see your credit history and your credit score be something that displays good responsibility and a good liability option, because when employers hire you, you can be a liability, you want to be an asset to that company. So a good credit profile, a good credit score, that history really shows everybody else who doesn't know you, are you a good risk and are you safe? And so that goes right along with buying a car, buying a house. They pull up those credit scores and, oh, are we going to get our money back? That's a low score, I'm not so sure. Or there's a nice pretty credit score, they pay their bills, they don't max out their credit cards, they know how much money they make and they know how much to spend. We're going to give you the good rates, therefore it's going to cost you less money over time. So it's very important you know that directly affects those scores to what interest rates and what fees you're going to get charged on borrowing money in the future. Alright, what risks do you have? Well, the risk is no credit cards, no credit history, unless you maybe have an auto loan, but you're going to have weak credit history, and investors and lenders want to see you be able to have that limit and not be tempted to spend it all the time. So if you take the avenue of no credit cards, it jeopardizes the fact that you may have an issue with getting credit in the long term. If you do get the credit cards, then you're going to have the ability to use those funds and judge exactly what's there and learn to take and manage your credit history. And other people will be able to see that when you go ahead and get your car loan, credit cards, and applications put together. So there's a little bit of good and bad on both sides, but the big key is you know how to use them and you use them wisely. The big thing I want you to make sure is you do two things. You know what your budget is. You know how much you make, therefore you know how much you can spend. that goes right along with your credit limit. Let's say they give you $1,000, and normally start out small, 500 to 1,000, and the longer you go, then they take and give you larger sums of money that you can use because you're more responsible if you've paid your bills. But your budget doesn't mean you can spend all that money. You need to know, oh, I can charge it and pay it, charge it and pay it. Because the nice thing about a credit card, it's free money as long as you pay the bill when it comes due. The minute you don't pay that bill in full, interest starts accumulating from the day you made that transaction. So, convenience, building your credit score and profile, building your level of responsibility, all those are very big keys. And the only way you can do that is to truly know your budget. So we didn't cover a lot on your budget, but you need to know how much you bring in each month, what your expenses are, and therefore how much discretionary or spendable cash you have. You don't want to go negative. Make sure there's always excess so you can save, have an emergency account, and just have a nice safety net that if you have an oops, you've got cash. You don't want to use your credit cards all the time and not be able to pay them off because you're digging a deeper and deeper hole. And the scary part about that is, let's say you charge $5,000 within a couple months. If you never charge a dime again, and let's say you're at 20% interest, $5,000 at 20%, it's going to take you about 9 years and $11,000 to pay that off. That's a long time. That's a